anyone who owns 1,000 single family homes. They're doing some very interesting things in the country in real estate, and I don't think it's what most people expect. So, Lance, what'd you find?
I have four buckets that I'm really going to try to track the best in media.
Institutional home buyers, let's define that as anyone who owns 1,000 single family homes. They're doing some very interesting things in the country in real estate, and I don't think it's what most people expect. The one and only Lance Lambert from Resi Club has put out some focused articles on institutional buyers. So, Lance, what'd you find?
Yeah, so Resi Club, this new media publication I've launched, I have four buckets that I'm really going to try to track the best in media. Home building is one.
Okay.
Two, housing market analytics, which I've been doing for a while. Prop techs and real estate startups. And then the fourth is institutional investors and really the single family rental space. Because in my view, I don't think it's been covered well.
Yeah.
I don't think people really know exactly what's going on as well. And so I really want to be a good resource that is a resource that is like analytical, like, hey guys, like
Yeah.
no spin, here's what it is. Here's the hard numbers. And one company that's really been great at giving me data for this, because it takes a lot of work because these companies buy through LLCs and they roll up and there's just a lot going on and each state's different. And they go in and they watch every home in the US and they try to figure out the ownership of it and put it into different buckets. And that's
Sure.
Parcel Labs. And they just did a new analysis. Can I share my screen?
I believe so.
So institutional investors, those owning at least 1,000 homes, like you said, they own 0.73% of the US single family housing stock.
Hmm.
So just under one out of every 100 homes. So it's like one out of, what is that, one out of 105 or something like
Mhm.
that. But the truth is, if you dig really deep into the numbers, what you will see is that while on aggregate they're a very small player, it's still dominated by mom and pops and people with
Sure.
5 rentals, 3 rentals, 10 rentals. What you will see though is that in certain markets of the country, they're much bigger. And then
Hmm.
within those markets, there are certain neighborhoods where more than 50% of all the single family rentals are institutional, which is very
Interesting.
interesting to see. And so in Atlanta, which is the market with the most, they own 4.4% of the housing stock there. And so this is a deeper dive. And what the data shows is that 36.8% of all institutionally owned single family homes can be found in just six markets.
Oh,
So
wow.
almost 40% are in just six markets, and that's Charlotte, Atlanta, Tampa, Dallas, Houston, Phoenix. I was actually surprised. I thought Phoenix would be higher, and I thought
Hmm.
Las Vegas would be higher too. Because to me, those are the ones that I think of the most. Because you saw this in the
Oh,
housing
yeah.
bubble. They went
Yeah.
in, they bought the bottom out. And those
Right.
markets just saw um, very odd. I mean, the troughs there were over 50% down. Like
Oh,
they were
for
just
sure. Yeah.
too suppressed. And to them, they just, they saw dollar bills because they knew that Resi at that point had just fallen too far,
Agreed.
oversold. And so in Atlanta, uh, well, so I talked to this one guy, a broker there, and he said that, pretty much like what you said, they came in and they were the buzzards and
Yeah.
possums and just cleaning everything up at the bottom
Yeah.
of the crack.
Yeah. I mean, I remember the day that Fresno changed, that when they started buying everything at list price. I mean, I bought a lot of property in the crash. I never paid list. These guys came in with their big ass checkbook and bought everything at list price. I mean, you couldn't compete. It was crazy.
Yeah. And one theory this guy has is that right now they're helping to keep the wheels turning for builders because of build for rent, which is
That's,
interesting.
yes.
I think it's
Yes.
possible that when we look back in a few years, there could be certain things that occurred within home building and autos that kept this cycle running longer. Obviously, the STEMI money is
Mhm.
one. The fact that the builders' margins got so high, and so now and the existing market has just been frozen and not given. And
Right.
so been able to just come down a little bit on margin,
Yeah.
cut back on the size, take incentives from cabinets and all this stuff and throw it at the buy downs and
Right.
really keep that economic activity rolling and keep this economy humming because you think the interest rate side would go. But we're getting off point. To keep it rolling. And during the pandemic, we saw very much a frenzy on the institutional side. We saw it on the small landlord side. We saw it on the Airbnb host side. We saw it on the institutional side. And the
Mhm.
reason being low rates, easy access to capital, soaring rents, soaring
Mhm.
home prices. It would be dumb not to be jumping in.
Right.
Everyone. And so of the homes owned in Atlanta, 52% were bought in either 2020, 2021, which is the real big year for the pandemic housing frenzy on the
Mm.
institutional side, or 2022. And then this year, only 3.6 of the homes through September were
Mm.
bought this year.
So just
Which
so I understand these numbers, so you're saying, hey, I'm Joe Blow, institutional buyer. I own 1,000 homes. Of those 1,000 homes, 520 of them would have been bought in the last 3 years. That's what you're
exactly.
saying.
Yeah.
Okay,
And
got it,
now we're
got it.
in a bit of a lull. Yeah.
Okay.
And then what's really interesting though is when you pull back the numbers, 30% of their portfolio in Atlanta is in 11 zip codes. So think about this.
Wow, that's some concentration.
Nationally, 13% of all institutional homes are in the Atlanta market. And then
Mhm.
within Atlanta, 1/3 are in 11 zip codes. So if you
Mhm.
do the math, it ends up being like 3 or 4% of all institutional homes in the country are in these 11 Atlanta zip codes, which is just kind
Wow.
of mind blowing.
Wow.
And Parcel Labs, what they think is that the Atlanta market, because it has a great long-term outlook, good demographics, good,
Yeah.
all these factors, and probably even like tenant laws, I'm sure is probably a factor too. That in the analysis of these different institutional companies, Atlanta kept coming up high, and so they all pushed into the market.
So let me ask
Um,
you a question. Let me ask you a question about this because I think what we're seeing is a change in institutional buying behavior. So again, I was around when the institutional buyers were buying everything out of the MLS for pennies on the dollar. But to your point, that was spread out. Everything was on sale. So they were buying the entire book. What I think we're looking at here is the transition from buying old fixer uppers to paying somebody to do build for rent, and I'm going to buy 100 homes at a time, because I think that's why it's so concentrated. You're basically uncovering where the build for rent is happening. I think that's
yeah,
what's happening
I,
here.
I, I think that's I think that's a big part of it is that the SFR where you're just having homes dotted all over the place,
Yeah.
gets to be challenging for an operator. Whereas build for rent, hey, we got the whole community. We can run this
Yeah.
like a oiled machine,
It's just
right?
an apartment that's, horizontal versus vertical, right? Or whatever you want to say. They're just the walls aren't connected. Yeah.
Exactly. And so I think that's probably at play. And this is one of those Atlanta zip codes. And in this one, they own 13% of the single family stock. And,
Yeah, so
quite,
I'm gonna get so this is great because I'm guessing there's a heat map even inside this area. Like in the middle left, there's a big they own a community there. The
that was,
bottom tip, yeah, exactly. The bottom tip, that's a community. All these little single dots, that was probably stuff secured,
yeah,
a decade ago.
yeah,
But
exactly. These ones are probably people got in financial distress. Yeah. And
exactly.
yeah, 10 years ago or
So
15 years.
build for rent is I just think build for rent's just starting. Right. We're seeing this in Atlanta. It's funny. I just talked to a Phoenix agent this morning, and she was saying build for rent's going crazy. She thinks it's going to be the biggest thing in 2024, at least in
Wow.
her market of
Yeah,
Phoenix.
and they're still raising capital for it for sure. And when I was at the Blueprint conference in Las Vegas, I talked to a VC who is putting money into an institutional company that is doing build for rent, but only for Airbnbs. Like they're going to build Airbnb communities, short-term rental communities.
Interesting. I knew some people doing that, like boutique hotels where they're all Airbnbs. Now we're going to do communities just for Airbnbs. That's wild.
I guess, yeah.
I
Uh,
guess, huh? Hmm.
And this is a different one. This is share of single family uh, homes for rent, and it's by the share that are institutional. So anywhere that is red, they are,
Uh,
well, dark red especially, but they own almost half of the single family rentals in the market. So they are starting to really become big competitors and set the market rates in huge swaths of Atlanta. Yeah.
again, this is now jumping off the page to me. I think this is just where they're planting build for rent communities, like that one on the far right at 80%. They probably
Well,
have two or three communities in there.
yeah, exactly. And well, and yeah, and that community, there's also a chance that some of these out here
Oh, for sure.
could be communities where there's not many single family rentals,
Oh, that
right?
could be two. Yeah, that could be.
There are
Yeah.
not many, so they build a single family community. Like, let's say you get a build for rent community in a great school district
Right.
that there's probably not very many single family rentals,
Mhm. Right.
very expensive, and so if you built something like that there, you could become a huge share very quickly. I
Yeah,
mean,
like
there's Alaska that if I go buy a rental, I'm going to own 100% of the single family rental stock if I go build
exactly.
something. And so I think my big takeaway with this piece is while institutional firms are a small player in the overall US housing market, they can be big players in some pockets of the country.
Yeah,
Um,
I think that's clear. I think Atlanta's a great example. And the other thing I would point out is I think this story has just started. And to the earlier comment about Phoenix, I think they're going to pick new markets. They're not going to only focus on Atlanta. There will be
yeah,
the next Atlanta somewhere else.
yeah, yeah. And one thing that Amherst CEO told me is that because of how tax laws work in some states, like states with higher state income taxes,
Mhm.
and he was, he's really smart. I was shocked how much into the economics he was getting with me on it. But something about how like states with higher property taxes and higher state income taxes, the economics don't work as well for single family rentals from his view. So
Okay.
my state was one that he said, Ohio, because we have like a 6 or 5% state income tax, but we also have high property taxes.
Okay.
Um, so I got to look into that deeper to understand that. But essentially, what he's saying is a lot of those southern states are great for single family rentals for the
Mhm.
institutional side.
There you go.
Um, this is so Invitation Homes just reported their earnings. They had been a net seller for 3 quarters, Q4 2022, Q1 2023, and Q2 2022. It's gotten a lot of headlines. I wrote about it at Fortune. Some of the YouTubers have really,
Oh gosh, this drives me crazy. The Crash Bros and Doomers.
yeah,
Institutional buyers are net sellers. Dude, they bought 60 and they sold 71. I mean, stop talking nonsense.
yeah. So essentially, what happened is that in late last year and then early this year, they were selling off the amount that they used to sell off the
Correct.
dispositions.
Yeah.
But they really just stopped buying. They kind of froze the buying. And what happened is a lot of the cap rates just don't make as much sense. There's
Yep.
not a lot of inventory churning on the market at the bottom where they buy.
Yep.
And it is what it is. And so this quarter, they are once again a net buyer, and boom, right up. We knew this was coming, and the reason
Mhm.
is they got 1,870 homes from another institutional firm. When I reached out to them in July when they announced it, they wouldn't tell me who it is, but I will
It's
say
billionaire Barry. It's
that,
billionaire Barry.
that's what I think too. And
Oh,
so I'm
there's no
checking into
question.
it. He was shopping a portfolio of 1,900 homes. It was announced in July they bought a portfolio of around 1,900 homes. Starwood announced that they got rid of around 1,900 homes, and then
Yeah.
they officially in the earnings got 18, just under 1,900 homes. And when I looked at the homes where they're at, they're kind of spread all over the place.
Yeah.
So it does kind of look like they just absorbed somebody's full portfolio.
Mhm.
Because if you're absorbing somebody's portfolio, that portfolio is going to be spread because you're not going to want to
Correct.
be regionally concentrated.
Yep.
So that's what I think. But I don't know it, and I'm a journalist, so I shouldn't say that I think that's what it is.
All right.
But
I am not a journalist, and I will say it. That's billionaire Barry, folks. He had to raise cash because he had other problems. So he sold some homes. But that's just my opinion.
and if you get rid of the 1870,
Mhm.
they were still a net buyer by 5 homes.
Oh,
So
okay.
not the huge boom going out and buying a lot, but still
But that
net.
shocks me. They were still a net buyer. That
Yeah, even
surprised me.
excluding the 1870, yeah, because that was one of the things I've been waiting to see with this quarter. So I knew they'd be a net buyer again, but were they still a net buyer after factoring the Starwood? And they were.
Hmm.
And
Okay.
then I was up a couple hours last night into the AMs doing this chart. I had to
Wow.
manually go through all the earnings to get this. This is their portfolio by market for Q3s. Atlanta, interesting. Number one, where
Wow.
they own the most. Then Phoenix,
Oh,
which
hold on. Yeah, let me look at this. So again, back to Atlanta, right? They're not really adding new stock
mm-mm.
really for the last 3 years, right? Just onesie twosie stuff.
Yeah, so
Where
that big jump up in the Atlanta wasn't them.
yeah, where did they go up meaningfully? Let's see,
Phoenix has
20.
been one the past couple of years,
Oh yeah, there we go.
but they haven't really. Their portfolio
Oh,
hasn't.
net selling. Look at that, SoCal. Net sellers.
Yeah, interesting. Yep, and South Florida, interesting.
Oh, interesting.
Oh, they went up. Um, Jacksonville kind of. They've exited Nashville over the past couple of years.
I wonder why that is. I always wonder why somebody gets out of a market. I wonder why
Yeah,
they got out of Nashville. I have no idea.
and one thing that was interesting is this portfolio that they took over really matched up with a lot of their current markets. They just threw on top a little here, a little there. So to me, that's probably why they bought it because
Oh, of
it
course. Yeah.
Starwood must have matched up with their portfolio. Yeah, they're
Yeah.
like,
And
oh,
again, they didn't get a new market because that would mean a new team, a new this, a new that. It was like, hey, we're just adding to what we already have. Makes total sense.
yeah,
So that's
Carolina
interesting.
going up. But yeah, this is not one of the ones that's like huge, robust growth. Um,
And again, Invitation Homes cut their teeth in the '08 crash. That's where they were born, right?
Yeah, exactly. Yeah. And if you actually go, yeah, exactly. It's like they were something created out of it, essentially.
Right.
Uh,
Right. And so Invitation Homes is sitting on a portfolio of I'm going to call it older homes because they were buying anything they could. They have Do they talk about buying build for rent? Has Invitation Homes done a build for rent community?
there was something on Build for Rent talked about recently with them. I got to look into it again. But there's, a lot of Build for Rent going on right now. So let me do some more research
Sure.
and get some more on the ground reporting on that,
Oh,
and
of
I'll
course. Yeah. Yeah.
back on.
It's
And then
yeah. Build for rent's
next
going to be something to watch.
next week we have American Homes for Rent reporting.
Oh, oh, very cool.
Yeah, so it's earning season. We've had 4 builders this week.
Yeah. Yeah. So why don't we just jump into that? Unless you got some more on institutional buyers, why don't you talk about what you saw from the
Yeah,
builders?
we could do builders. Yep, let me
Okay.
go. I have a story on that as well. Um,
Have you found a way to create like a 30-hour day or something? Because you get so much done, it's wild.
yeah, yeah. Really stretching myself out of the gate, but one thing that's good is I like some of my charts. Like this one took me through like 2 or 3 hours last night. I was
Okay.
up probably one doing it, but now that I have it, every quarter will be easier to update.
Yeah,
This
that makes
I
sense.
already had this chart, and so I just added the new numbers. This took me like 60 seconds to do.
Got it. Okay. All right. Very cool.
So efficient is what I got to do. Uh, Fortune 500 home builder just made it clear they are gunning for the small builders. This is a Zuber talking point for quite some
Mm.
time. So I don't know if you're going to do a little nailed it, but this is one of the things you've been talking about, which is
Nailed
the
it.
big builders. They have the balance sheets. They have the support on the mortgage side. I mean, Pulte Group has an in-house mortgage company.
Yep.
These small builders just don't have that. And so he said, it gives us the opportunity to do things that small and local builders can't.
Yep.
I can't even access my own story.
Yeah.
Uh,
That's funny.
Give me
No,
a.
yeah. But I'm already playing this out 6 or 9 months, Lance, because I see a very big, potentially very big problem come next April, May, June. we might see shelter inflation pick back up because we have more builders exiting. We have less new inventory. It's just, it's frightening to think about. It's a little early to think that far ahead, but that's something that's concerning to me is we could see shelter inflation reignite.
Yeah, so you still have softening on the rental, especially on the multifamily side.
Correct.
Still more softening probably to go.
Correct.
Supply coming on the market there. Single family rentals is still inching up a little bit. And then
Mm-hmm.
house prices, after giving up a little bit, especially in the West and some of these boom towns, is now is moving back up. And so by the end of the year, we'll probably be up 3% year over year on house
Yeah,
prices, single family.
probably.
And so the Fed hit it, and they rolled over the appreciation rate, decelerated everything. I had a story out this week, and looking back, it's kind of like the great deceleration. You're going from the fastest growth rates
Yep.
ever on rents
Yep.
and house prices. Boom, you hit it down, you go down to almost zero, maybe -1, and then back up. But you can only pull that trick out of your bag once, right?
Once.
You only
Once. Yeah.
slam the brakes like that once. Um, so it'll be interesting to kind of see how that moves forward. Okay, so I have it now. Am I going to share?
Yeah, please.
Okay, so here's the story. This one only went out to the Resi Club Pro subscribers. Actually, this is my draft of the story. So give me a second. Okay, this one looks like it might be the final. This went out to my pro subscribers.
Mm-hmm.
Here is the revenue and net income for
Oh,
Pulte.
wow. Look at that. Yeah.
As you can see, revenue and profits in the '08 crash fell way down.
Yep.
A decade of moving up, a hiccup here, but still, fairly elevated.
Yeah, I'd say so.
The sales and the profit. So this is the gross margin.
Yep.
Um, Still fairly high, down just a little bit from the very tippity tip, but far above pre-pandemic levels. So they still have cushion to do things. And
Yeah,
this is
if you were going
getting
to
all
average
time.
that, Lance, if you're going to average that over the last, oh, that's 20 years. Would just 15% kind of feels like the average looking at that, just roughly.
Yeah, 15, 20. It's somewhere in here, I think.
Yeah, so they roughly have they when I talk about builders having fat margins and they can eat margin to buy down and do those things, it's this is the chart that I was looking at. I'm like, they got plenty of room.
Exactly. Yeah. And this is with doing 5 and 6% fixed rates.
Wow.
I like this chart a lot. It's net new orders and homes in backlog. So as you can see, moving in to the bubble, and this is very important for a historical look back. What you started to see is a huge divergence in net new orders and homes in backlog. Their homes in backlog started to build faster than net new orders were going up. They got a huge backlog, and then over a 3-year period, net new orders just kept falling, kept falling, kept falling. There's so much existing inventory on the market. And this
Yeah.
was occurring even before the crash happened. So it
Yeah,
worked into,
absolutely.
what is that called when you're watching something in slow motion that's about to
Train wreck.
happen?
Yeah, it's a train wreck
Yeah,
in slow motion. Yeah.
yeah, exactly. And then a long recovery. And then during the pandemic, you see the biggest jump up as work from home really takes off.
Right.
And you see it come down a bit. This is coming down off the highs. And then I would describe this drop as the mortgage rate shock.
Correct.
Um, but then what you've seen, and this is very, very important, this part right here, net new orders has now went back up,
Mhm.
and homes in backlog are going down
This is
still.
this is why I am concerned about inflation next summer because we already know existing home sales and that part of the market is freaking broken. Now we have builders blowing out inventory with by buying rates down, hence the blue bar or purple, whatever that color is. And oh, by the way, they're slowing down future builds. So we could get to the spring selling season with no new homes and no existing home. That is my and dude, Lance, if rates fall, oh my God. I'm
Yeah.
like, this could get batshit crazy.
And last chart here, just if anybody's interested to know where Pulte plays,
Oh,
Florida's their biggest market. Actually, if you combine Florida and Texas, that's like 40% of their market. And they have a small Northeast presence, 5%, Midwest, 15, Southeast is pretty big, 19%, and then the West, all of these states, 18%.
man, very, very cool. Well, folks, if you're not following Resi Club, I don't know what you're doing. If you Resi Club free, 5 articles a week, I believe. Resi Club Pro, 3 additional articles plus access to his charts or in data set. I don't know what you're doing. Anything you want to say to wrap this up?
No, I think that's it. Just keeping an eye on the institutional side, home builders, prop techs, and then all these regional housing markets.
Very cool. Thank you for all you do, Lance. You're amazing.